All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan. Today we are looking at those swing trades that we brought back. We had a very interesting week, so we're going to look at the positions I took and some other ones I'm looking at.
All right, if you guys enjoy this kind of stock market content of Two Stupid Guys Trading Stocks, by all means, give us a like and subscribe below. We'd love to have you guys along with us in this adventure. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
All right, know some of these ticker symbols here, a little near and dear to my heart.
Yeah. I'm being more stringent on the criteria.
Okay, I like it. Nothing wrong with that. So, full disclaimer: this channel is literally called Two Stupid Guys Trade Stocks. So, if you follow us into any of these trades, you do so at your own risk. Good luck. Dylan and I have seen way too much red this year in our accounts, so we're definitely not people that should be emulated. Just documenting the process and seeing how other people do it.
Oh, there you go.
All right.
Because we're not other douchebag YouTubers, we're not going to look at. There's a typo here because I did put Baba in a really small font on the cover that no one noticed.
Yeah, I noticed.
We're definitely not going to look at Fubo because I have a huge internal bias. So I'm never going to swing that. Baba has a bigger trading and a huge event took place. It's not ready to swing, just throwing it out there. But yeah, we're not going to push our own investment portfolios. Also, if you watch the other video, I'm crazy negative after Fubo. So
all right. We have a separate video coming out this weekend too about Alibaba earnings.
There you go. Okay.
All right. eBay. You took the eBay trade, huh?
Yeah, small position. I just took 20 shares. It's pretty much at where I got it. PayPal is one I recommended last week. I did a leap. Can you explain what a leap is? I probably should have put that in here.
So leap is long equity anticipation. I think the P product.
Probably.
I don't remember. But anyways, there's also S security at the end. But the whole idea is it's a way to leverage your money. So it's a long dated option. Usually it's actually longer than a year. That's about when you see leaps. But yeah, if you're sure about the direction of the movement, and it's a good way to leverage your money.
Yeah. So I did. Mine's a little bit less than a year. It's 10 at the end of September. So it's 10-ish months, 10 and a half months with a 220 strike price. So basically when these happen, I'm not going to look at so like right now I'm negative like 15% on it because PayPal took a dive. I'm not going to even check it for like 3 months. So I'm out. I'm not looking at being in this trade within even 5 months of expiration because I want to get the theta decay. But basically, these are when I'm pretty sure in the direction. I don't necessarily have a stop loss because I only take these for companies that should be theoretically around.
Understood.
Right. So these are not your Fubos.
No, not at all. Oh, CCL. Definitely interesting. So I have a poor man's covered call right now running on Carnival Cruise Line. Definitely got hammered a little bit with this whole like Austria lockdown, like the stay-at-home trade has come back a little bit. That's why I saw like Apple up this week, but then you saw a lot of the travel stocks down.
Yep. Also, Norwegian did an equity offering. Mm-hmm. They were on my list to watch, or actually to buy if they followed some rules, which they didn't. So I did not enter that position because they got hammered. Actually, I think Monday they announced it and they went way through my buy zone. They just kept going.
Yeah.
So CCL is a little bit of a sympathy play on that. If you want to go to the chart, got it up. So, these are the last 5 days. That's a pretty staircase down, right?
Uh-huh.
We got a nice hammer forming right here. I kind of want to look at what happens. We have a big support at 1910. And, what did it go? 1986. So it did go 14 cents below this $20 level. This $20 level is a huge level for CCL.
Yeah.
Carnival Cruise Line. So I'm looking at bouncing this back to about 2250-ish. Kind of where these meet. And yeah, that's pretty much it.
Okay. Yeah, I mean, it's been a while since we've looked at it, but if you look at it from a valuation standpoint, Carnival Cruise Line really, once back full up and running, should be around low $30 something a share stock. I think if you look at them from equivalent pre-pandemic to now, even
Yeah,
adjusting for share dilution.
yeah, that's with the adjustment of share dilution, right?
Exactly.
Okay, because they were like 50,
Yeah, I know,
and
right?
then they gave a bunch of shares
Yeah, a lot of shares and a lot of debt.
and a lot of debt. Yeah.
Yeah. Ooh.
Disney. So Disney has just hit an RSI 25. That is quite low for Disney. We haven't hit that since mid-May.
Yeah, interesting.
That's pretty low. All right.
Yeah.
They have been getting absolutely hammered. Honestly, I kind of want them to keep dropping a little bit before I take this.
Yeah.
I'm looking at like the 150 range, not necessarily right now.
Okay.
CCL, I would like, by the way, for it to have a high. But for Disney, I do kind of want to see it kind of like a rounded bottom here. It hasn't put in a high volume hammer, so this is not something I'm going to take right away. I'm going to watch to see what happens.
Hmm. Okay.
Obviously, we have a little bit of an earnings play here.
Yeah. Brutal.
Didn't go super well. But when I say it's wicking, it means it's going down and setting lower lows, but we're starting to have the buyers step in and fight. They're weak, but they're fighting, right?
Yeah.
Oh, I guess you can only see those wicks. There we go. That's better.
Yeah, I see
So
him.
you can get those wicks.
Interesting.
Boom. Right?
Yeah, it's definitely like a legacy company that'd be nice to add to your portfolio at some point in time, whether or not it's now is the opportunity or not. But I mean, you've seen the Disney Plus kind of like growth taper off a little bit. That's part of the story here. Then you've also seen a little bit of issue as far as like labor, the rising labor costs, and Disney had a hard time getting people back to work in their parks and paying
Yeah.
them to pay. They have such a powerful brand that they've been able to raise ticket prices and add premium products, like in terms of like the Disney Genie service. I don't know if you've heard of that, but they're not still not quite making up for the amount of additional labor kind of expense that they've had.
Oh, I'm going to say that the subscription service is ridiculous. Not the product. The fact that it's saying that there's slow growth, they got like a absolute disgusting amount of like opening. Like well, how many subs they get off the bat? Was it like 100 million or some crap?
Yeah, they came up to about like half of Netflix's total subscriber count.
Yeah, in like a year and a half. Like,
They
come
they
on. What?
they did it very quickly. If you actually look at the chart though, it's kind of like they've started to kind of round a little bit. So like people that were going to become Disney Plus subscribers did so quickly, and like their rate of acquisition has been slower. Yeah,
Fair enough.
yeah. I mean, it's still I think it's still a product with its place in the marketplace for sure.
Right. Let's
As
go
a
to the last slide
Plus
here.
subscriber here.
You're a subscriber here.
Yeah, as a Disney Plus subscriber here. Oh yeah, Boeing.
So, Vinny kind of already answered this. Hard sell off on the whole travel sector.
Yep.
I like BA because of the moat, and we'll go to the chart super fast.
Yep.
Massive red candle. That's all we need to see. This is something I'm watching, not something I'm trying to get in. I wouldn't want to take this until it's at about the $200 range, so we're still well out of range.
Okay.
The other ones I have them right here. Twitter and Snap, same thing. We're still tanking. We're still going down. So I'm looking, maybe we get down to 40 would be really cool for Twitter. And then, still heading down. Same story. It's not worth taking until I see at least a decent fight. The whole baking sector. Hey, this is your favorite stock.
Yeah.
Citi.
Citigroup, always undervalued.
Intel, baby.
Yeah, basically.
They put in a nice hammer. It's funny. The only reason I didn't put this in my list, I hate this stock.
Yeah. You can't trust them. I feel like that's my intuition with Citigroup.
Citigroup, BAC, you can see they're all putting in similar hammers going downwards. And then we're going to look at this later. Once again, I own a lot of this, and me and Vinny have been hoping it goes lower, which is a weird thing to say when you own it because I want to buy more at 130.
Yeah.
So
Yeah, I'm completely okay with this. We're gonna do, like I said, a separate video on the earnings there, but you know how it goes. People are very funny because like for the last year, Alibaba has not been like a uh, kind of business fundamental analysis driven company. It's been entirely about news. Then all of a sudden, there's like one question about the business, and like they sell off like it's been trading at like fair value.
right, yeah, there you go. And this is how you know we're honest. This stock I have an uncomfortable amount of shares in, and I got to be honest, this is a beautiful short. Great for Dylan. Yeah.
Well,
All
maybe
right.
you could make up some of your losses by selling at the money covered call or something like that.
Tempted because this is a beautiful short. It didn't even hold any resistance. Not part of this is just so you know we're honest.
Yeah,
Because obviously no one wants to go long in this crap.
yeah,
So
yeah.
all right.
Even Alibaba probably has a little bit still more downside from the current
I'm
level, I
hoping
would
like
say.
$8, yeah.
Yeah, yeah, exactly. All right, guys. Well, get this video out there. Let us know what you think down in the comments below.
Yeah, thanks. Have a good one, guys.
Yeah.